If you're looking for tax-advantaged real estate investments, you probably came across Opportunity Zones and Delaware Statutory Trust. Both offer compelling benefits, but they serve different investor profiles and strategies. So how do they compare, and which one is right for your investment goals? Let's break it down. An Opportunity Zone is a way to defer taxes on personal property. For example, if you sold some stock or you sold a business, if you invested in an Opportunity Zone, you would be able to defer the taxes by that investment that you've made. Capital gains on real estate exists, but not only capital gains is the tax hit that you take. Also, you have depreciation recapture and you have net investment income tax. So an Opportunity Zone will only defer the capital gains, but it will not defer the depreciation recapture or the net investment income tax. If you sold some stock or you sold a business, then the Opportunity Zone would be a good fit for you. But keep in mind, you're only deferring the taxes up to the end of 2026. But after that, after you've paid the tax, everything that you gain is 100% tax-free as long as you hold it for 10 years. Well, we use the term DST, and a DST is a way to own fractional interest in institutional quality real estate that will continue to allow you to defer your taxes through a 1031 exchange, also allow to depreciate the asset, write off all your expenses, receive monthly income because most of the time the assets in these DSTs are stabilized. In addition to that, when the asset is sold, you still have the ability to do an additional exchange to defer your taxes. Big time differences. Opportunity zones normally are the type of real estate where you're going to reposition an asset. For example, take like a furniture warehouse and you're going to change it to self-storage, or you're going to do ground up development, and the tax treatments are completely different. You will not defer 100% of the taxes if you're trying to invest real estate proceeds in there, but you would defer 100% of the taxes if you're actually investing personal property and the gains of that transaction. Compared to a DST, the DST is really going to only work for those investors that are trying to defer their taxes through a 1031 exchange. The DST, unlike the Opportunity Zone Fund, is going to have stabilized assets where it has an operating history and it's going to produce monthly income. Well, let's separate the two. DST, really for those investors that are looking for stabilized assets that are going to produce monthly income and definitely defer 100% of the taxes through a 1031 exchange. Opportunity Zone, completely opposite. Opportunity Zone is for those investors that have sold some equity or sold a business. Really, income is not really important. It's just all about appreciation. Opportunity Zones. Well, Opportunity Zones are just that, opportunity. 9 out of 10 times, non-stable assets. They're repositioning an asset or doing ground up development. The risks associated with those type of ventures are the ones that you need to really consider. As far as a DST is concerned, the risk is illiquidity. The same with an Opportunity Zone, both are illiquid. You're not gonna have any control as far as how the property is operating. But as far as a DST is concerned, you're having a stabilized asset compared to an Opportunity Zone non-stabilized asset. At 1031 crowdfunding, we have both. If you're in a position where you need to do a 1031 exchange and you're tired of dealing with the tenants and toilets in the trash, give us a call. If you sold some stock or you sold some businesses and the tax hit is huge and you want to do an Opportunity Zone, give us a call. Both Opportunity Zones and DSTs offer unique tax advantages, but they cater to different investment strategies. When evaluating your investment options, think about the risk you're willing to take on. Choose an opportunity zone if you're looking for potential tax-free appreciation. Choose a DST if you're looking for tax deferral without active management. Still not sure what is right for you? Check out our resource library for more videos. And if you found this video helpful, don't forget, like, subscribe, and hit the notification bell for more real estate investing insights.